All right. Well, hey there, everybody. Chris Franks with Texas West Capital. It is just a few minutes after 11 a.m. Central Standard Time here on Friday, May 6th, 2022. Here in for once, a sunny, it seems like it's been forever now, morning here in Boerne, Texas. Glad to have you all checking in. Man, oh man, got a lot going on, right? So we had the Fed this week. They didn't disappoint. 50 basis point rate hike. First time we've done that double-digit hike since, I believe, around 2000, which was right before the dot-com bubble crash. And now, of course, the market pricing in a 75% chance of a 75 basis point rate hike in June. Crazy times, right? What else do we have? We have potential triangles for the Ethereum and Bitcoin possibly completing. There are a few different versions of the triangles. I've gone through them a few times. I'm going to go through them today because we're getting where we're at. The market itself, people are bearish, right? People have probably just about given up at this point. They think pretty much everybody thinks it has to go down, well below 28.8, 20,000, 15,000, 10,000, whatever everybody's thinking. And while it could, I don't think that you necessarily say, okay, it's definitely going down there now. So we'll take a look at that. We'll look at GBTC, the Grayscale Bitcoin Investment Trust there, for you guys to kind of take a look at and compare, markets, because remember, they hold Bitcoin, right? That's what they do. So there's something interesting with that. We'll take a look at the Qs today, the cubes there. What else are we going to take a look at? We may take a look at MicroStrategy. You guys may have heard that LFG became the second largest corporate holder of Bitcoin the other day. So they surpassed Tesla. So now it's MicroStrategy, LFG, and then Tesla now. LFG, I think, has about $1.5 billion worth of Bitcoin at this point. I think they're going up some huge amount to back their stable coin. So interesting, I don't know. Interesting way to back it with Bitcoin. I don't know. It seems like it's extra risky, but hey, they're buying up, so that's all right, just in case you thought nobody was accumulating, right? So a lot going on right here. With NFP was released today, non-farm payrolls report, stuff around where we were kind of looking, expecting, so no real big scares off that or anything like that, changes on that, but maybe hinting at maybe a less aggressive Fed stance here in the future, given a little bit of breathing room with what happened today. So we'll talk about all that. Man, who's here already? Let's check in with you. Let's see. Oscar, what's up? Claudio's here. Chris, what's going on, sir? Blaze is checking in. Bamboo is here. Dex, what's up, man? Kimozabi is checking in. LXT, Mark, Data. Good to see you guys. Who's buying in this market, Chris asked. Well, like I said, man, LFG, they're up to $1.5 billion of Bitcoin now, right? You know who we don't hear a lot of buying from right now? MicroStrategy. Guess it's kind of hard to buy when you're dropping when the value of your stock's dropping, right? Well, we talked about that. Travis, what's up, man? Checking Texan in Australia here, he says. Good to have you in, man. Gold Docker, what's up, buddy? Let's see here. Oscar believes scam pumped to $39,999 and then down to $32,000. We'll take a look. I'll show you what I'm looking at on the charts, guys. Leo, what's going on, man? Good to see you checking in here. Wazobia is here as well. Wazobia Dollars. Good to see you guys. Hey, listen, if you haven't yet, check us out. Join us over here at TexasWestCapital.com. Click on this little link right here. It'll take you to our other website, and you can join us. Man, oh man, I'm telling you what, we started doing, so Tier 3, we already do a monthly drawing now. If you're in Tier 3, I teach every week multiple different strategies, how to trade, right? All these different things. And so basically all you have to do to enter is just show us your, a screenshot of your entry and exit, and let us know what technique that I've taught you that that you're learning from me that you use to be successful with that trade. That's all it is. It doesn't matter how much you're trading or how little you're trading, just that you're using it with real money, right? And if you do that, hey, you get entered, and every time you do it, you get another entry, and every month then we'll draw a free month of Tier 3 access for you guys. But also, we just started the other day, interaction of the community is really, the big thing. That's how you get all the ideas out there, and you get discussions going, and people learn, right? And so in order to try and drive that home, we've started another giveaway. We'll give away a Tier 1, a Tier 2, and a Tier 3 free month of each every month. And basically all you have to do is make one comment, one question, one something in any channel each week. That's all you have to do, just one each week. right? And as long as you do that, you're going to be entered. Everybody that does that gets one entry into the drawing, and then at the end of the monthly cycle there, we'll draw from that, and you could win a free month, like I said, of Tier 1, Tier 2, or Tier 3. It just depends. If you're Tier 1, you'll be bunched in a drawing for Tier 1 members. If you're Tier 2, then with Tier 2 members. If Tier 3, then Tier 3 members. Doesn't matter which channel you guys are posting in, just that you post at least once a week. That's all it is. And so, again, I just think, the reason why we do Discord, the reason why I do this the way I do it, if you guys don't know, Texas West Capital is all about education. This is really what it's about with us. And the whole idea of Discord and the discussion channels, everything we have, is this idea that that you're being immersed, that you're just dropped into everybody talking about it. And at first, if you're new, it may be a bit of a headache. It's a lot of new information, a lot of new stuff. But by sitting there and being involved in that all the time, you become, you start to understand it more. It's like if you're learning a new language, let's say you're learning Spanish, right? And somebody drops you off in, or if you're learning French and somebody drops you off in Paris, France, right? Just right in the middle there, everybody talking French, everybody speaking French, and you know a little bit, and you just kind of start learning more and more and picking it up. That immersion, that's the best way to learn. And so that's what we're doing here. So, a lot of our members don't really say anything, and that's fine. That's fine, except I think you're going to get a lot more out of it, a lot better, if you just kind of involve yourself a bit, right? Try to ask some questions, try to give your thoughts. Nobody makes fun of anybody in there. It's all about learning. It's all about getting better. So anyway, I think the good thing about that is we got so many people, hundreds of members, then, they could share their ideas about what's looking at different markets. And first of all, others may not have seen these things. Second of all, others may not have seen the same things in the same way. So really, it just helps everybody with that. So anyway, that's what we're doing, guys. So if you're Tier 3, you get 2 chances to win a membership every month. For a month, if you're a member. And then, of course, if you're Tier 1 or Tier 2, you get one chance there with that, doing that one thing. So anyway, just always doing more, always adding more, trying to make this a better experience for everybody. All right? So Joe is concerned, or maybe not concerned, but believes we're going to 27. That seems to be the market, right? At least 27 and lower, right? I don't know. I'm not so sure about that, okay? Let's go ahead and jump in here, guys. First of all, let's go ahead and look at the DXY. I think we've got a flat correction completed here, potentially. We're going to want to see a breakout above this swing high right here, and then above wave B here. If we can do that, that gives us a minimum expected wave 3 target up here at, what is this? What is this? 105. No. God dog it. Let me see here. 1, 2, 3. There we go. Yeah, up there around 105.75. Right in that area. So that's what we'll be looking for if we can get that. I don't, maybe it's a 1, 2, 3, 4, 5 maybe. And this would be an A, a B, and a C. And it'll come down toward this 15-minute pivot maybe. So I could see that potentially happen. If it does that, then we'll look for a breakout. This would be wave B here. And so we look for a breakout above this 103.633 as the added confidence, the idea that wave 3 is then in progress. But as long as we rally from here and head up above wave B, we should head up toward that wave 3 target. And so that's kind of where we're sitting with that, guys. Excuse me. Let's kind of jump in Bitcoin. So locally, Bitcoin here. I think this may be what's going on here. So, we've gone through a couple of different ideas here. I think we're kind of with this one at the moment. It's because it's this WXY here, and then we're finishing wave C of Y, of X, or of E. Like I said, this could be, we'll look at picture at the larger macro picture, the triangle, in just a minute. But we could potentially be seeing it finishing up down here. Now with this, we've got a 1, 2, and then a 1, 2, 3, 4, 5, right? So 1, 2, 3, 4, maybe an ending diagonal here, coming back down. Wave 5 into this purple range. Really, most likely, I'd be looking at it from this daily S1 pivot at 34,331.5 to the 15-minute S1 pivot right up there around 34,804. That would be most likely where I would expect it. So if we get this dropped on this area, we break out above wave circle 4 here at 36,664.5 almost. If we can do that, that's going to hint that we may be done here. We want to see an impulsive breakout above the large descending channel here. That's going to be our first real clue that that bottom may be in if we can get that, and that'll give us a pattern target here of about $6,431.50 above the point of breakout. So that's what I'm looking at right now. The other possibility is maybe wave 4 is still in progress. Maybe this is A and this is B, and we have C for a flat up here toward this 15-minute pivot, which is right at the ascending channel support. So we could finish wave 4 up here, and then we'd get wave 5 down still to the same area, and then we'd break out. That's all. That's what I'm looking at, guys. I really don't see any reason to be really freaked out about lower yet. Again, overlapping price action, whatnot going on here. Let's kind of take a look at this bigger picture. So this is what I'm potentially looking at here. And this is the weekly Bitcoin chart right here. Now, there's a couple of different triangles that could be going on here, guys, okay? There's a couple of different ones that could be going on. So right now, the one I'm looking at is this idea that maybe there's an A, B, C, D, and E here. In order for this to remain correct, price has to reverse before it hits this swing low, this wave C swing low here at 32,933 and 33 cents on Coinbase. As long as it reverses prior to that, it's quite possible we may be done here, E and up, okay? Now, if it drops down below this area, it's possible this is A, B, C. And so you end up having wave C over here. In that case, it has to reverse prior to the wave A swing low here at 28,800. So if it drops below this swing low and then reverses before this swing low, then that might say A, B, C, and then we'll have 3 up for D, 3 back down for E, and then done, okay? Finally, the other triangle to look at here is possibly A, B, C, and then W, X, and then 3 up for Y to get D. And then you have an ABC down for E, and then you'll go. So a couple of different triangles depending on what it does. Notice, in none of this did I say we've got to go to 27,000 or lower. If we do break down below 28.8, my first thought is this weekly S1 pivot. Same thing I keep telling you guys right here at 26,240 or so. But right now, we've still got a lot of support levels here prior to that. So I'm not interested in shorting it myself. I'm looking for my long still based on a possible triangle here or one of those variations of the triangle. You can see that right now we got rejected. I've already talked about this before. We got rejected at this support resistance level up here, this second highest volume node, and we're right here in this higher volume, the highest volume node area here at this other resistance support level right now. That's kind of where we're at. So a lot of possibilities still in this. We are actually in, if we follow this up here, we're still within this triangle. We're still within this ascending channel, right? We still haven't broken down from that. So I think we've still got some good possibilities here. And here's the thing. I think even more than that is the Ethereum triangle, right? Same idea, A, B, C, D, E, right? Same idea. If it breaks down below wave C, then it just has to reverse prior to wave A, and it can be an A, B, C is C, D, E, or again, A, B, C, and then W, X, Y for D, and then 3 down for E, and then back up. But everything's still the same thing with this triangle as well. You still got hit at your resistance support level here, still got rejected, and we're trying to find support right now on the support resistance level right here. So same things going on here, but the volume profile looks a lot better on Ethereum, a lot cleaner, a lot clearer than it does on Bitcoin, right? So Bitcoin starts building this base right here a little bit early, right? It starts building in this area. Ethereum's got the whole decline in volume all the way through till we get to the bottom here, and then it starts picking up as we're going here. Remember, from this swing low here, from this end of January swing low, we have bullish market structure. Low, high, higher low, higher high, potentially higher low. Same thing with Bitcoin. We have from right here, we have a low, high, higher low, higher high, potentially a higher low. So we've got bullish market structure here for what? February, March, April, right? Just over 3 months. Don't forget that, okay? Now, none of this guarantees the price is not going to go down, guys. And you have to understand. You absolutely have to understand that. None of that is a guarantee that price will not go down. But I need to see some decisive movement between these swing lows before I go short. Why? Because if I don't, I'm the same person that many of y'all might have been, or at least you saw over here, where everybody kept saying it had to go down again, just like you're saying now, 17, 10, 7, whatever. And in this area, I said, no, it looks like a flat. I said, as long as we're staying above this swing low, I'm long. And sure enough, we rallied up, right? Again, right here, everybody said it had to drop down below. Same things you're hearing right now. It had to go down, it had to go down. I said, well, as long as we're above it here, I'm looking higher. And we're doing that. So here we are again. As long as these support levels continue to hold, there's no reason for me to go short. And if I go short, it's just to be that short period of time, but there's so many opportunities for it to rally back up that if I was to go short, it would be just a short period of time on a small time frame. It would not be that I would be buying here to short down low. Here's the thing. If we're breaking down below this swing low, initial target right here at the S1 pivot on the weekly, but we could go a lot lower, right? So there's a lot of room to make a lot of money. There's very little room to be wrong in this area, guys. Very little room to be wrong in this area. Right? So, yeah. There's a lot of stuff to think about. All right? So these are the things that I look for, guys. These are what I'm watching. This is how I trade. I don't jump in just because there's a chance. I'm much more methodical about my entries and exits. And sometimes I'm wrong. You guys have seen that. Sometimes I'm wrong. It's part of trading, guys. But the important thing, the thing that makes you a trader versus just, the thing that makes you a speculator versus some Yahoo who's a retail Yahoo who doesn't know his arm from his elbow, right? Doesn't know, well, I said that a lot nicer. Arm from his elbow, yeah. The thing that differentiates you is that you are more methodical, you're more logical, you're looking for the higher confidence trade. You're not entering just because. And on top of that, you understand that some of the most important stuff you do is risk management and is understanding where your validation and invalidation levels are. If you don't do those three things, you shouldn't be trading, guys, because you're going to lose everything you have and more. I promise you. I promise you. You're going to get lucky every once in a while, and that's going to keep you putting more and more money in. But you're not going to be a successful trader. Take profit. Take it often. Nobody ever lost money taking profit, okay? How many times have you guys, I posted this morning on Twitter there, how many times have you guys been in a trade where you've been up, you've been in profit, and then you got greedy, and you said, oh, no, it's going to keep going, I need to stay in it. And then it turns back against you, and either you finally exit at a loss, or you get liquidated at a loss, right? How many times does that happen, guys? Tell me it hasn't happened consistently. Because I know you'd be lying if you say it hasn't. You know it has. This is just what people generally do. It doesn't mean you're a terrible person or stupid or anything like that. It means that you're making the same mistake practically all new traders make. Same mistakes I made when I first came in. Until I got my act together. Okay? So you can do that. You can get your act together. You can do it properly. But it comes with the realization that first you aren't doing it properly and you need to change some things that you've been doing. There is nothing more humbling than really learning how to trade, guys. Because it forces you to accept that you make stupid choices. That you make choices you know you shouldn't make, especially when you know you shouldn't make them. It's a very humbling thing. If you're not humbled as a trader, then you aren't really trading properly. You're lying to yourself. Okay? So just understand that, guys, all right? Tabor Football 77, what's up, man? Checking in from Kansas City. Man, oh man, the Chiefs, huh? Yeah. Let's see here. Oscar says DXY was in the 90s. Stocks in the U.S. were pumping last year. Rates didn't happen. Ukraine didn't happen, and COVID was still in the news. How can crypto pump in the current macro? Because you're too busy worrying about other events. You think that those events determine what goes on with the chart. All they do is give knee-jerk reactions. The trend, whatever it is already set. What is on the chart is decided by the social mood already. The social mood is there, and it shows itself in the chart. The Fed is always playing catch up. It's always reacting, right? The Fed reacts. It doesn't act. The Fed does not control anything. In the short term, people in the market might make a trade based on whatever's going on with the Fed, but that's the short term. That doesn't change the overall trend, the macro picture. all these things. See, if you study charts long enough and you study news cycles and all these things, what you're going to notice is what we tend to do as human beings is we associate news with price action only when it suits us. Price action in news happens all the time, all day, every day, guys. There's only a few times, though, that we actually associate it with it. And we do that just to make ourselves feel better, right? So, you've got to look. I think what you really need to do is get a lot more out of this 5-minute time frame, guys, and look at the larger picture. Zoom out to the weekly. Look at the macro picture. How can Bitcoin continue to go up? Because, well, heck, we're going to look at DXY in a minute here. It's probably getting close to the third wave being done, which means we'll have at least a month of pullback for wave 4, at least a month. Probably a couple of months. That's no downward pressure if that's what you were looking for, right? But you got to think, man, the stuff does not... What happens in the chart, like, Bitcoin doesn't move because the dollar's moving, okay? Bitcoin doesn't move because NASDAQ is moving. That's a bunch of nonsense. Everybody's like, oh, correlation. Correlation, kiss my rear end, all right? Seriously. That's getting you way out there worrying about stuff that you shouldn't be worried about. Stuff that doesn't make any sense. Stuff that doesn't really matter. Everybody's like, oh, look, it was correlated from March through April or March through May of 2020 and then didn't for a year and a half. And now it's correlated again. You know what, guys? If it's not correlated all the time, then it's not correlated, period. Again, it's the same idea as we associate news with price action only when it suits us. We associate correlations only when, or non-correlations only when it suits us. And if you're arguing with me in your head right now, or heaven forbid, yelling at your screen, don't do that. Check yourself, honestly. Check yourself, guys. I told you, trading, when you learn to trade properly, it's a very humbling experience. Because you have to admit that you're doing things wrong and what you're doing wrong and that you don't know what you think you know. It's a very humbling experience. If you cannot do that, you are going to have a lot of trouble trying to trade, guys. And so the question then becomes, do you want to be right or do you want to be profitable? And for most people, the answer is they just want to be right. Which is why, again, 3 months in, 90 days in, 96% of new traders are out of the market, right? Lost everything they came in with, a lot of times more. Don't be that person. You have the choice to be something different. Get off the sound bites, guys. Even a lot of the professional bigger traders, they still live by a lot of these sound bites, that news moves the markets and whatnot. Like I said, knee-jerk reactions. In the grand scheme of things, they don't change anything, right? They really don't. But again, these things I talk about here, this is the real payment. This is what you should be here for, is hearing me say these things, because this is what it means to be a trader. Whatever's going on with the charts or whatever, that's all, lipstick on a pig, right? That's all just extra stuff, right? But these things I say when I'm talking about being a trader, and mindset and emotion and understanding and humbling and stuff like this, this is what will make you a better trader. This is actually what matters. Because if you can't accept these things, it doesn't matter about how well you are at doing all that other stuff, because you won't do it. You'll always find a reason why not to follow through this time or that time. Okay? So anyway, so for me right now, still quite possible we've got this triangle. If it drops down, we could still have that wave C of the triangle, right? This could even be, again, still part of wave D, right? WXY, right? So a couple different triangles could be happening here. But the idea is that we get a rally either prior to, Bitcoin here, prior to 32,933 or prior to 28.8. Now, if we drop down below that, now, I think there's a good argument to be made for a possible flat correction here, right? So A, B, and then 5 waves down. We'll see how that turns out if that were to happen, but it's possible, right? And with that, it might actually go, a bit lower than this S1 pivot here, right? It could come down a bit further. The other possibility is that, okay, so again, we're looking at this being 3. The other possibility is it's topped out at 5 up here. I can't tell you that it's not. I cannot guarantee you that 5 waves has not been done here. But until we get some stronger indication of what's going on here, I think you're erring on the side. I think as long as I'm all about erring on the side of caution, okay? And so again, there's not a lot of room to be wrong in this area, to short and be wrong. There's a lot of room to wait and be right on a long, right? But we've been going sideways here since, really since over here, since January of last year, 15 months, right? So everybody's getting impatient, they're getting tired. We pressed down here and they thought we were going down and we didn't, went up. Pressed down here, they thought we were going, didn't, we went up. Now they're saying, oh, here we go again, we're definitely going down this time. Well, maybe. But until we do, why are you stressing out about 27 or lower, right? It's just kind of opposite for your view. Years prior, DXY pumping risk assets, heading down, rates up risk assets. Yeah, but but you're not thinking about the whole thing. So when you think about it, so if you think about the big picture, right, the big macro picture, potential depression coming in, right? I still think that's what we're looking at, right? And we'll look at the stock charts here in a minute. I'll talk to you about that. But so we're thinking end of the credit cycle, end of the credit bubble, right? Why is it so hard to accept that Bitcoin could have one final push up into euphoria before crashing down? Why is that so hard to accept? That's what I want to know. Because everything else is coming down and Bitcoin's going sideways, guys. Everything else is coming down and Bitcoin is just going sideways, right? Right? I mean, this is where it is, right? And like I said, again, it could still come down. I'm not saying it's definitely going to 100,000 or whatnot. But I think you need more confirmation in this area here that is going down before you really kind of accept that it's going down there, right? Yeah, you're saying inflation making grocery carts smaller. So what? You act like inflation's going to continue rising forever. I believe we're topped out in inflation. So if we're topped out in inflation, and if we're topped out in inflation and it becomes more expensive to do things because the Fed keeps raising the interest rates, and businesses have to spend more money to service their debt, right? Yeah, so that's less money chasing goods and services. How is inflation going to keep rising up? How? If you don't have a ridiculous amount of dollars chasing the same products and services, how does it continue rising at the rate it's risen? Everybody gets emotional at the extremes. This is why retail buys the tops, sells the bottoms. Okay? Because we're human beings. We push it, and finally at the extremes we're like, we can't take it anymore. We got to go with what we're thinking with those extremes, right? Inflation is so high, it's never going to stop. Well, how is it going to continue up? If nobody's got money to spend, if people are losing their jobs, if companies can't produce more, if companies can't become more efficient, how does all this money keep going here and not just to debt payments? And by the way, if you've got money, if you're paying dollars into your debt, if you're paying down debt, you're destroying dollars. Everybody's like, oh, the dollars the Fed created. Yeah, blah, blah, blah. Again, if that's what you're worried about, you don't understand what's going on. Everybody thinks just because the Fed prints a dollar that all of a sudden inflation is up, by a dollar, right? So there's a lot in that, a lot of misunderstanding in that. The real dollar creation, the one that matters, happens at the bank level. So when you're taking out loans, credit cycle, think about credit cycle, right? When you're taking out loans using credit cards, dollars are being created. When you are paying that down, dollars are being destroyed. Destruction of dollars is disinflation, at least, potentially deflation. Okay? It's not inflationary. If you're paying down that debt, you're destroying dollars. You're sending them out of the system. They're going back to the bank. If you have money and you're not spending it, you're keeping it in the bank, you're saving it because you're worried about losing your job, about prices, whatnot. You're not just spending it, woohoo, all nilly out there, right? All willy-nilly. Guess what? It's disinflationary, at least potentially deflationary. Your dollars are sitting in the bank. They are not chasing those same goods and services. Okay? So, and even if inflation goes up for a few more months, who cares? What is that? So what? It goes up for a few more months, and then what? Again, the Fed's already in here tightening like a mother, right? 50 basis point rate hike, right? Potentially a 75% basis point rate hike next month, right? Who's gonna take out more mortgages? Who's gonna get more credit with the rates raising as fast as they have? These are the fastest 3-month rise in rates that we've had in like 30 years. Where is all this money coming from, guys? That's going to be doing this. That's going to be keeping your fantasy about inflation going, right? Think about it. Who's coming to buy crypto this year to push into 100Ks? Nobody has to come to buy it. This is what you understand. Big players, right? So if what happens in accumulation? Your normies, as you say, right? They sell, right? They sell, they get out. The big players, the ones who understand what's going on, they're accumulating at the lows, right? They're buying it. Who buys it to send it up? You're asking that same question right now, yet it happens. Over and over and over again. Who buys it? Right? Who buys it? This is the thing, guys. You got to think beyond just the simple question there, right? Because that question really is, who buys it all the other times? This area right here, once accumulation completes, this area is for your large, not even necessarily institutions, guys. This is just for your large players who understand the game and who do it right. They're buying in here, right? Well, really down here. They're pushing it up here, right? When it breaks out here, this area, that's when the retail comes back in. No different right here. It was this area here where retail gets back in, not this area. Same thing right here. Do you guys remember this over here? Right here, everybody said it had to go down to $7 or whatever it was, right? And I said, no, it says going up, right? And it went up. Right here, they said same thing. I said, no, it's going up, right? They said right here, same thing. I said, no, it's going up, right? And it went up. They said right here, it was going. It still went up. There's not a whole lot of volume associated. Look how low this volume is here. You had a spike here. Volume still stayed low after that. You had a couple spikes there. Volume still dropped. Look how low the volume still is. Still pretty much near these lows. Who was buying it? Right? It's the same idea, guys. Same idea. Okay? So stop asking yourself these questions that really don't mean a whole lot. And I don't mean these, please don't think I mean this, that I'm deriding you or making fun of you or anything. I'm not. I'm trying to get you to think beyond the simple answers, beyond the knee-jerk reactions, beyond the sound bites that most of y'all, hear just all day long, every day, and it's hard to disassociate from that. It's hard to push away from that, to pull away from that. Sound bites are one of the leading causes of losing money in the markets, guys. Listening to sound bites. Sound bites don't do you any good. Most of the sound bites are wrong, believe it or not. Most of the stuff that these big, larger players, espouse are not correct. But they make money because of their size, guys. Because of their size. They're able to bump the market around a little bit. Make some more. Make money that you're not really open to. Especially if you're still thinking in the same mindset, right? So they can make these mistakes and still be okay. You, though, you guys basically are you have a lot less knowledge about markets, right? First of all, and you're a lot smaller, so nothing you buy or sell is going to move the market in any way, right? Just on size alone, some of these players can move the market a bit, knee-jerk reaction, right, and make some money. make some short-term profits. Don't think that just because somebody is bigger or has more money, or because they are some big investment thing that they can make all the money, right? What think about what happened with the GME, not GME, GME, GameStop, right? Think about that. Melvin Capital, right? Got their rear end handed to them. This is a big time professional firm, right? This happens all the time, guys. Just because you're big doesn't mean, just because you're a professional does not mean that you can win, does not mean that you're going to win, does not mean that you really understand what's going on. Everybody makes money in a bull market. Everybody is a genius in a bull market. Okay? Don't forget that. All right, guys. Let's jump on here real quick. Cubes. You guys may have remembered this chart. I put this in the newsletter back around the beginning of October. Let me see. When did I put this? October 4th, 2021. Look at that. So I had this in. I think I called this top up here on one of these broadcasts that we do here, right? And sure enough, we've just continued to drop down on here, right? So, again, dropping down. We're getting right in down to this wave 4 area here. There we go. Boom. First subwave may be complete here. 2, 4, 5. Yeah, it looks like 1, 2, 3, 4, 5 maybe. Or it may come down a bit more. It could come down a bit more even. But wave 4 here is the big one. That's where we're at. We're in this wave 4 kind of area. So, man, look at this volume pickup over here. So continue to come down there. Falling through these high volume node areas. Look at that. I could even see us fall a bit further before we bounce a bit maybe. But nonetheless, we were looking at that top back in October and November of last year. And sure enough, there we go down. Now, again, topped out in November. What else topped out in November? NASDAQ, right? Tech. S&P, Dow, whatever, topped out in January. But tech, right there in November, right? So we'll see here. Let me see. You were joking. Oh, Mark. Don't worry, man. I know you're joking. But yeah, guys. So, I mean, a lot of what I say, I get it. It's really difficult to accept. It's really difficult to kind of wrap your head around, right? Because it's so different. It's so different than what you're taught, right? Or it's so different than what you see shouted, the sound bites shouted out all the time, right? But these are the things that you have to get to understand. You have to understand that if these things that you think are correct were correct, you'd be making a killing, right? You'd be making a killing, right? Are you making a killing trading? I mean, honestly, are you consistently profitable week after week, or at least month after month? Based on these sound bites, these generally accepted ideas about the market, right? So, and the answer is no, right? It's no. I know. But, as human beings, we tend to, especially because it's a subject matter that we don't often know a lot about, right? Markets and whatnot. What did I do last year, guys? I spent so much of last year explaining things like, again, I said, everybody worries about what the Fed's printing, but they don't understand that real money creation comes at the bank level. They don't understand that. I spent many months last year talking about that, right? Explaining it step by step, right? Most people don't understand. They don't understand how that works. They don't understand repo markets or reverse repo markets or their importance to what's going on. People really, even some of your biggest money managers, guys, they don't understand the Eurodollar market. It's a lot different. Now, just because I have a certain understanding of these things doesn't mean I'm always right. No. You're not always going to be right as a trader, guys. You're going to be wrong a lot. That's okay. That's why risk management is so important. That's why understanding validation and invalidation levels are important. But a lot of what I talk about is happening, right? Think about it, guys. Last year, about this time last year, about May of last year, I was telling you, remember the Fed was talking about how they weren't going to raise interest rates until 2023 at least. They weren't going to do QE. They weren't going to start tightening their QE until 2023 and whatever, right? What I tell you, I said no. I said I bet that they were going to do some turn off that spigot there, QE, right, prior to the end of the year to do that. I said we were going to at least get 3 to 4 rate hikes this year, didn't I? And we're even more aggressive now than that. But that was a year ago, almost to the day, right? Last May I talked about that, right? Well, everybody else was talking about how no rate hikes and QE was going to continue and all that, right? And it's not because I'm anybody special. It's just because I've learned to look at the market a certain way. That's all. Get off a lot of the sound bites that we get out there. They're dangerous, guys. Okay? Yeah, I was right about the dollar. Yeah, but it took longer to get there, right? It took longer for the dollar to get there, right? To do that reversal. And that's fine. That's fine. Again, when we talk about large things that are happening, if we're talking about major turns, it took a bit longer for the stock market to find the top that I was looking for, right? I got it most of the way correct all the way up there, right? Most of the way. But it did take longer. Yeah, it happens, guys. Yeah, definitely. Let's see here. When rates are happening and the DXY is pumping, you still see Bitcoin pumping. I don't understand that. Yeah. No. That's fine, Oscar. And really, man, I understand that for sure. Let me see if I can just show you real quick here what I'm kind of looking at it in this way, right? So I am basically looking at this as like a 1, 2, 3, 4, 5, right? So we're going to get a 3, and then we'll get a pullback on a 4, and then we'll get a 5. So if we think about what does that mean? So when the dollar is rallying, that usually indicates that the market is fearful, okay? That means they're in a risk-off attitude, right? When the dollar pulls back, it means there's a risk-off, right? That doesn't mean that everything's bull market and whatnot, but if we think about it, if we're nearing the top of wave 3, and we get a few months of pullback for wave 4, right? Because this is a big wave 3. Wave 4 should take a few months, right? That's a few months of risk on. And if we're nearing there within, the next few weeks, month or whatever, right? And Bitcoin is doing this triangle, it kind of pushes its way up as the dollar is kind of losing its power there, right? As the market's kind of going from risk off to risk on, right? Kind of makes it up. And so we're getting this breakout in this area here, right? Of Bitcoin going up when the dollar's pulling back for wave 4, quite potentially, right? It's as simple as that. If you need a narrative, it can be as simple as that. Again, I can't guarantee you that's what's going to happen. And so, this is just looking at with where we are right now. What are we kind of looking at, right? We're looking at most likely scenarios from where we are at that moment. So that's what I'm doing here. I definitely would need more confirmation to the downside here to start feeling like, okay, maybe wave 5 is done up here. But until we get that, there's no reason for me to change the idea that we might have some kind of macro look, that we might have some kind of triangle going on here, especially when volume is seeming to confirm that, right? So you've got, again, you've got the volume going down until we get to this area here when you see volume start picking up and going sideways here and kind of building a base, right? Which is why I was thinking maybe we've got D&E done here, because this base building usually happens at that end. So if that's what it is, okay, well, so Ethereum looks even more compelling, right? Has a much cleaner move down. We've got this move up here as we've been rallying here. Moving sideways here, building that base, right? So, again, potentially, right. So that's all. Remember, things don't move in relation to the dollar. This is the one thing, guys. Remember, the dollar, legacy markets, Bitcoin, whatever, they are all independently moving based on that market's perception of risk at that time. Is it risk on or is it risk off? Is it getting more risk on, getting more risk off? And each market is different, so they're going to come in at different timings, right? Again, NASDAQ topped out in November. It took 2 months later before the S&P and the Dow topped out, right? If we look at the DXY here, it bottomed out in January of the year previous, right? The second bottom over here was May. August is when it broke out here, right? November was this top here. November to January was this drop, this few month drop here, right? So yeah, that's all. That's all. So yeah, don't think that anything is moving because the dollar is moving or anything's moving because legacy is moving. Stop with the correlation nonsense, guys. They're all different markets. They all move according to the market's perceived risk. Okay? So why might Bitcoin have higher up still to go when everybody else is kind of coming down for the most part, right? Because Bitcoin is the new kid on the block. It's the one where everybody still thinks they're going to make $1 million overnight. It's the candy store. That's why Bitcoin could still go up one more time, finish off, and top out after the other markets have already topped out. It's a lot smaller market. It's a lot newer market. Only been around, what, 12 years, right? 12, 13 years. That's why. It's a different market, a different demeanor of the players in it, and then a different understanding of where we are in relation to risk within that market. Because remember, when you look at it, you go, okay, well, I think risk on or risk off, right? But then you go, well, how much do I think that? When you look here and you go, well, if I'm looking at Bitcoin, the chance that I can make a ton of money is really high. So that's going to water down my idea of risk in that market, right? Think about that. If we just look at everything in general, sure. Maybe you view the same risk in Bitcoin, maybe even greater risk than what you do in legacy, right? But the other side of that is there's still this possibility you can make so much money, right? What if there's one more move up? Keeps people in the market, right? Keeps people thinking about entering in the market, especially if the other ones are going down and Bitcoin starts going up, right? Yeah. So, you know, you have to think beyond correlations, beyond the idea that these things move because they move together or whatever, because they move because the other one moved, right? They're all independent markets, guys. But they're all moving in relation to the market's idea of risk in that market. All right? So Q's text here. Look at it, man. Boom, down. What does that weekly look like? Weekly's nearing a drop here, right? We could potentially see it getting down here around... Oh, this looks like a good area right here. If we're continuing to come down, I think we can look maybe around just about 300 there for the cubes. Maybe get us 5 down there before heading up, right? Let me see here. I haven't even really looked at this. Wait, 1, 2, 4, 5, 2. We might be 1, 2 right there already. So 1, 2, getting on to 1, 2, and then that'll be 3 of 3 coming down here, and that's gonna hurt a lot. That'll hurt a lot of people a lot. Your third waves, guys, those are the monsters. That's where everybody kind of gets sucked in. That's when price moves fast and furious. So yeah, I think looking at this right here, I mean, it could very well be a 1, 2, 3, 4, 5. Well, let me see here. Yeah, it could be a 1, 2, and working on 1, 2, or probably like a 1, 2, 3, 4, 5 still. So we'll get a 1, 2 here. 1, 2, 1, 2, and then 3 of 3 coming down, I think. Ravender, good to see you checking in. So yeah, I mean, I think it's not looking good, guys. I mean, you know, right here, we're just kind of piercing right through. This should all be support right here, right? Look at how we're just piercing right through it. Finally grab a bit in this demand down here, right? But getting sent right back down. Weekly still has a bit further to get oversold. Look at our volume. And now, here's the good thing if you want to look at it, right? Which may say, hey, we may still have a little bit further up, right? Because look at the volume here and the price action. Supply clearly in control, closing at the lows last week, right? On this huge spike of volume, large candle spread, right? This week, large, really large doji here. Right now, currently above where it opened on a little bit more volume. So a little bit more effort, a heck of a lot more result for demand, right? You got a little bit more effort here. Huge loss in result for supply, right? Supply, big old volume came in. Good candle last week, and this week they're trying to put even more pressure in, and they're not even getting, they're above where they opened. So, you know, supply really kind of losing out so far with that. So yeah, I could see even some sideways, a little bit up here before heading back down further. Sure. Um, yeah, so, kind of looking at that there. Told you we'd look at MicroStrategy. Here's MicroStrategy. Here's the weekly, guys. If I'm looking at this, I don't know. I think we could see potentially MicroStrategy hitting down to 196. Potentially. Let's see here. Yeah. I think there's a good chance we can see that. I mean, right here we've got 1, 2. This is probably 3. We'll get a 4, and then we'll get a 5 at least, right? Let me see here. This might even be an ending diagonal. Might get a 1, or like an A, B, C is 1, 2. A, B, C is 3, 4, and then A, B, C is 5 down toward that level. So you get A, B, C as an ending diagonal down there. That'd be a big move down, right? Here's that larger chart. Remember, this was right at the top of that .com bubble. If you guys have not looked at history right here, the interviews and everything with Saylor back at this point, you should. And then compare it to now. But you notice here, his company popped up and he went sideways here, basically, barely making new highs. His competitors all flew up from 2013 to 15 on upward. He didn't start going up until he started buying Bitcoin here. So his software company was well behind everybody else. All his competitors, IBM, everybody else was jumping out way the heck ahead of him. I mean, they were like, I've shown you guys the chart before. And he was doing the kind of this thing. He started talking about Bitcoin and buying Bitcoin that he went up. Right? Mark, have a great weekend, buddy. So, I mean, again, he was one of the high flyers at the top of the .com bubble. Almost lost it all at the bottom. And whereas from the bottom here, most of everybody else kind of really flew up here. And we're up to this area back over here, 2013 to 15. It took him until 2021 to get to that same area. And only because of Bitcoin with his. So, kind of interesting, right? You can see you still got room here on the RSI here to come on down further. But yeah, I mean, even if you were to look at this as, say, I don't know, WXY, right? So ABC down, ABC up, ABC down. You're still looking like you're heading down here toward this $300 area. Or I'm sorry, $200 area. So a 50% haircut or so from, well, no, not 50%, 33% haircut from where we're at right now, potentially, before we really see it start coming in. Look at the volume here at the top, guys. Look at this volume at the top. Clearly telling you, let's go back down. It drops down, people buy. They think, oh, it's going back up, right? And then you get caught right there at the resistance. Boom. Distribution right here. Redistribution right here. Accumulation down here, I think. He gets liquidated. Market sells his Bitcoin and history rhymes. Oh, man. But yeah, so, I mean, that's kind of what I'm looking at as far as MicroStrategy goes here. And I don't say this to be disparaging toward him, but you guys, you have to understand, so many people out there are evangelizing him because he's saying the things they want him to say, the things that they want to hear. But you have to understand the history of what happened. Understand what happened here. Look back at those interviews from back here, and here, and here, and here. And kind of compare what he was doing then with how he's been here. You see a lot of similarities in that. There were good threads about debt and MicroStrategy on Twitter. Oh, I'm sure. I mean, largest holder, yeah. He may want to hold forever, but he doesn't necessarily able to, right? He's got to make debt payments. And, if interest rates continue rising, I don't know. I think it would be silly to think. I haven't even looked at his debt what his debt says. I need to go look at it, but I would be really surprised if it was some kind of flat interest rate. That would be stupid. Anybody loaning him money for that would be stupid. Because, interest is your compensation for the time value of money, right? It's your compensation for opportunity lost by loaning that money out, right? So, yeah. 21,000 per Bitcoin liquidates his company. And, we don't have to, accept that that's what would happen there, right? He would just need enough at that point to, or prior to that, to stay afloat, right? He could sell a percentage of Bitcoin, right? And make all his payments and be fine, right? Now he's going to take a loss, sure, on his Bitcoin, but he could sell it, right? It's not like he just has to hold to hit 21 and then get liquidated, right? So, yeah. Are there any charts that we can use to better time real estate purchases? Usually things we look at are the, oh my gosh, I can't even think of it off the top of my head. There's a home producer index. There's a new homes index. There's a, you can look at things like Whirlpool, because, again, if people are feeling good and they've got money to spend, so the housing market's doing good, you're going to see people updating their homes, right? So Whirlpool's a good thing to look at. What is it? Home builders. Is that X? I got to think about it quick here. Yeah, there's the XHB. That's it. The Spider Series Trust Home Builders ETF. So that's what you can look at. There's other ones. I mean, there's other home builder stuff out there, but that's XBH. You can look at lumber, the price of lumber, right? So if lumber's falling off, it's because people aren't really buying anymore. So new home construction then is dropping off, right? Yeah. So a lot going on with that, for sure. But XHB, let me look here real quick. I haven't looked at this in a bit. I think the last couple of things we looked at were, I think we looked at this and then we looked at Whirlpool and, what was the other thing we looked at? We looked at lumber not too long ago. Yeah, I mean, if you're thinking about buying a house now, I don't know, man. I'm looking to buy a house right now. I understand we're at the top of the market most likely. It sucks. It's killing me. It's making it hard to make a purchase. But I think, we are here. 1, 2, 3, 4, 5. I think we're 5 up. Look at the volume up here at the top. The spike of volume up there. Yeah, I think we're at the top there. But here's the thing. The thing about homes is that as the price rallies, right, you have to pay more, but you're going to do it on lower interest rates, right? But then as interest rates rise, less and less people buy because the mortgages become more expensive, right? And so less and less people buy, so the prices of houses come down, but that, you got the Fed still hiking interest rates. So you're either paying more interest or you're paying higher price for the house. It's really kind of what it is, unfortunately. Now, what we're going to look for usually is a pullback to wave 4. So, usually we would assume wave 2 is going to pull back here to this kind of area. Minimum, initial target. 1, 2. Now, you got a lot of people talking about now, yeah, but prices are going to remain high because there's a shortage of homes to be built and whatever. But if people aren't buying, I mean, what shortage are we talking about, right? I mean, what kind of shortage are we going to continue to have if people can't afford to buy? If people are losing their jobs, if we go into a recession or heaven forbid a depression, like I'm thinking we probably are, end of the credit cycle, right? Then people are going to be losing their jobs. People that are going to be taking pay cuts, they're not going to have the money to spend like they used to, right? So I think, definitely things to watch there, right? I mean, I'm fortunate that I'm in a position where I can buy it now and not worry about it. But even that, it would be something that I just keep for a long time, rent it out when I get a new one kind of thing. But so look at that, 50% drawback right to this wave 4 area. We should be looking at least at that. Right? So, yeah. XAB is a good predictor. Sure. Yeah. But there's lots of different ways to do it. Lumber, XHB, look at things like Whirlpool. Again, the idea with Whirlpool, I don't think a lot of people really understand this, but Whirlpool is a lot of home upgrades and whatnot, right? So you get these home upgrades, and so if people have money and they're spending money and they're feeling good, with their housing, well, then you're going to see Whirlpool rising. But when people are losing money or they're feeling worried about the economy, they're not going to really be updating their homes, right? So Whirlpool's going to pull back, kind of idea. Yeah. Let me see. Gabriel, what's going on, man? He says, I did some numbers yesterday and calculated that compared to 5.5% today, if I was to buy it at this rate, my payment is the same as a house purchased at 3.5%, but at 100,000% higher price. Okay, yeah. Yeah, basically, I was looking at this. So if I had bought back in February, right, before these rates really started rallying up, when it was still just above 2%, my payments on, say, a $700,000 home, it's at the low end there, like that, it's something like, I don't even remember now, $700, $600 maybe, greater now than it was just 3 months ago, the monthly payment on that. Probably a little bit more than that. I think that might have been looking at a little bit cheaper house. But yeah, so, when you're looking at $1 million, $1.5 million, something like that, this 3-month rise that we've had in interest rates here has really become a lot more expensive. So yeah, but even at the lower end homes, guys, even on 300,000 or something like that, and I think it's even more. Like I said, for me, I can handle something like that, right? But for most people, it hurts a lot more, right? The inflation, the prices rising, interest rates rising. These things hurt those who are at that, living to paycheck kind of thing or lower, right? Those are who really get hurt by these things, and it's significant. Somebody might have been able to buy a house in January at the interest rate, but now they can't afford to. Just 3 months later, right? 4 months later. Yeah, it's serious. It's serious. But the Fed, the Fed is always reacting, right? They're always responding to what's happening rather than being ahead of it. So what they do often does more harm than good, right? Because again, if things are already at the point where they're at, and we know by looking at the Fed numbers, the BLS numbers, right? We know that purchasing power has dropped off significantly, right? So people aren't going to they don't have the money. And on top of that, the government, free money that was coming from the government and, the mortgage moratorium, those are all gone, right? Student loan moratorium still in there, at least through August now. So there's some help there, but people are not getting the help they were before. So they already don't have money from that, right? All that extra money they had is now a lot less. On top of that, they get to this point where their purchasing power is a lot less, right? So yeah, we talk about those month-over-month rises and whatnot in terms of the the monthly NFP report, right? And so even though people are, up until recently were a little bit of a wage increase, month over month, it wasn't keeping up with the way in which prices were rising. So their purchasing power was still falling back. So people are already slowing down their buying. And here comes the Fed. Man, we're going to ratchet this thing up, right? 50 basis points, maybe 75 basis points next month, right? So the economy's already going to be slowing down just because people don't have the same money they used to have to chase after prices, right? Supply bottlenecks kind of cleared up a bit. A little bit more in some areas because of the whole thing with Ukraine, but nonetheless, not like it was, right? So what is the Fed actually doing other than making things worse, most especially for people who are working who are living paycheck to paycheck or worse? That's all the Fed's doing, right? They're hurting those people. It's not cool. It's a really cruddy thing, right? Let's see here. Hex USDC. What do we got here? This is an old chart. I don't know. Whoops. Let's see. So I put this together when? I put this together the 1st of April. It must have been a little bit. I must have come and updated this a little bit after it because I've got this right here. So 1, 2, 3, 4, 5. Man, that could very well be 5. Huge leading diagonal off that though. Let me kind of zoom in a little bit here. Yeah, it looks like a little bit after that. I came in because this is still here from back then. Let's see. 3, 4. 1, 2, 3, 4, 5. That'd be a slight pullback there. And let me see if I can find another chart here real quick. Give me just 1 second. Trying to find something here. Oh, come on. I could have sworn I had a newer chart. Not here, not here. Well, yeah, I can't find it over there. So let's see what we've maybe got here. I think let's see here. If we look at this coming off this swing low here. Yeah, I think maybe we're getting pretty close up there. I don't know. I think maybe we've probably got I think this wave 3 may still be holding in here. I think we're still building wave 3 here. I mean, this may be off a bit. But I think if we look at it there, let me kind of get rid of this. Oh, what did I just get rid of? Oh, I just got rid of that line. Okay. Okay, so I think no, I think it's got to be 1, 2. Yeah. I think we just keep looking up here toward this. I don't think we worry a whole lot about, because it's still continuing to rally up here. I'm going to get rid of this now. I think we just continue looking up here toward that wave 3 up there. Yeah. Yeah, so this might end up being some of a somewhat of this right here. Maybe something like this. 1, 2, 3, 4, 5. 3, 4, 5. What would that pullback be on this 3 here? It's possible we might be able to get a 1, 2, 3, 4, 5 out of there to get that 1. And then we go 1, 2, 3, 4, 5. Maybe that gets us 3 there. 4. And then this right here might actually be wave 1, 2, 3, 4, 5. So maybe 1, 2 of 5 heading here. Yeah, so target might be a bit higher up there. So is that 24 cents? 24.066. Yeah. I mean, this makes a lot of sense. This ends up hitting then the right up here, 25.72 or so. Would end up hitting the bottom of that supply structure and get that pullback for wave 3. Maybe. So I think, I mean, this could be 5 here, and we could head back. But I think either way, I think if we continue to fall back, we find support around this 4-hour pivot maybe, right here around wave 4, and we rally up. So whether this is 5 and then 1, 2 heading up, or whether this is 1, 2, 3, 4, 5 heading up there, I think we still continue higher on that. So yeah. Let's see here. Yeah, let me look at gold real quick, since we always do that. Pull up my gold chart here. Where is gold? Where is gold? By the way, guys, check out my Twitter, TX West Capital. I've got something there from Elliott Wave International. It's normally almost about $220. It's their GMP, which is their global market perspective. I think if you're really serious about understanding how all the global markets work and how they kind of interact and everything, I think it's a great thing. You can get it right now for $9. So you're getting a huge, huge discount on that. I've got the link on there. Actually, you know what? Here's the link right here. So if you're interested in that sort of thing, if you're kind of like me, you're a finance, econ, junkie kind of thing. Let's see if I can get this here. I think this is definitely something worth getting. Right there's the link. And like I said, you can also click on it there at TX West Capital or on Twitter. And I think I also posted it to our Facebook and Instagram and all that as well. Or if you're on our Discord server, even on the free side there in the announcements section, it's listed there as well. But a great price for 50 plus pages of analysis worldwide. It's pretty great. So especially if you're one of my followers who comes in from the Eurozone over there, or Asia or something like that, it's a pretty great thing to kind of look at, and really cheap. Like I said, $9. So check that out. What was I looking at? Gold. That's what I'm trying to find. Sorry, I pulled it up to my announcements channel on Discord. And that's what reminded me to tell you guys about that. Let's see here. Where are my gold charts? God, we got so many channels, guys. You don't even really know. All right. Gold. Here we go. Esteban, what's up, man? Always good to see you checking in. Let's see here. So gold. I've got kind of this idea going on here. So basically a 1-2. Looking for a breakdown below 1862 to signal that wave 3 is in progress. Down to a minimum expected target of 1663.60. As you can see here on the 1 hour, we're basically topped out over here and trying to cross bearishly and overbought here with the Stochk RSI, right? So yeah, looks like maybe like a 1 and then an A, B, and then maybe 5 up here. 1, 2, 3, 4, 5 maybe. So it finishes a flat correction for, like a 1, 2 coming down. Silver, I think, pretty much looks the same kind of way. Let's see. Yeah, same idea. Except with this one, I've got this right now on the smaller time frame. I've got this idea at a 1, 2 here. And then I was looking at this as a flat correction here. So 3, 4, 5 here. What is this? 23,285. 23,285. I don't think so. I think it's I think it's maybe 1, 2, 3, 4, 5. But either way, overall we should be headed down toward a wave circle 3 target down here at 16,350. So whether this is 3, 4, or it's 1, 2, kind of like with gold there. I think we're going down. This is your range here. Notice all these huge bits of volume coming in your range here. Range is just a whole bunch of huge spikes all through it. Usually that's indicative of distribution. So looking for a breakdown. See, we already broke down through wave X here. So again, if we break down through the swing low here at 22.110, that should really kind of add a lot of confidence to the idea that we're heading down for that. Let me see here. What do I think on all the gaps on Netflix? Well, I think, Netflix fell hard and strong. And usually, that's a capitulative light type of move. So I can see price rallying back up a bit. I don't know that I necessarily believe it's done yet, but, overall, with the overall move down. But it's come down quite a bit. God, I don't know if I've got what I've got on here with Netflix. Let's look at this one. Let's see here. So I was looking at potentially, so I'm looking at this as 5 up. Coming up off there, right? And this thing always moves this stuff around. I hate that. So annoying. And this could actually be 3, 4 up here. This 3, 4. So this is all wave 3 here. I just threw some labels on there real quick, but at the end of the day, it hasn't even pulled back 23.6 yet. Now, there's been a big move. You can see all that large volume coming down off that. Yeah, I think this may be like a 1, 2, maybe a 3, 4, and then a 1, 2, 3, 4, 5. So maybe looking around here before we get our good bounce. Maybe around 158. Maybe. I mean, this could be 1, 2, 3, 4, 5. Like I said, it's an A, a B, C, 1, 2, 3, 4, 5. Yeah. So I don't have that A, B, C. Why is that not showing up here? Visibility. There we go. Put on the weekly. Yeah, so I'm kind of looking at it as A, B, maybe C coming down, but could also very well just be working on that 5th wave down and get A down here. And then B would rally back up to this 360, 370 kind of level maybe. How far would that be? Yeah, see 50 to 61.8 right in that area. High volume node. Get rejected and come on down. May target the 95 level here. Yeah, look at that. Wave C will equal wave 1 right there around 81.5 if we get, or wave A, right? So if wave A finds this S4 pivot on the weekly, rallies back up to this high volume node at around 366 or so, then wave C will equal wave A right there around 81.5. So it'll get you right around this area right here. Yeah, I can see that. Like I said, it's probably getting long in the tooth for the drop, though. Usually these big, strong declines like this are wave 3s or wave Cs. So again, could be A, B, C. Also could be 1, 2, 3, 4, 5. You can move up and then back down. So yeah, quite possibly. Why would you think that? Why would you think that silver would have a 10-year Wyckoff accumulation? And who cares that it's used more than gold and stuff? Yeah, that doesn't really matter. Don't take that personally. I didn't mean like who cares like to you like, oh, you're an idiot or something. No, not at all. I'm just direct when I say things. That doesn't matter. And so if you think about it, if in answer to your question, if I'm correct and a recession is coming in, not a recession, but especially a depression is coming in, then there's going to be less production of solar panels and electronics and cars and all that, right? So electronics, solar panels and all that. There's going to be less production. So less demand for silver in that case, right? Yeah. So that's the quick and dirty, easy answer if you're looking for that. If your reason for silver to go up is because it's used in those things and you expect production to increase, well, if that's your thought process, then the counter to that is, okay, credit bubble is over, 200 somewhat year cycle is done. We've got a recession, or we got a depression similar to the Great Depression coming in. There won't be as much being done with that. So the demand for that will be really dropped off, right? If I'm correct on that. Obviously, I can't guarantee I am, but things are really kind of looking that way, right? If we look at the expansion of credit, if we look at things that I've looked at over the last year with you guys, last 2 years, we look at the churn in money, right? So we look at M2 velocity and how that's decreased since what, 93, 96? So if we think about it, and you guys, you talk about all these dollars being printed, right? But what if the printing of the dollars is compensation for the lack in velocity? Again, velocity's been dropping off since, if we look at the Fed side, since 93 or 96, right? It's been steady downtrend. And the printing of money has been going up. But we're nowhere near hyperinflation or anything like that, right? So what if just all this money printing is just kind of balancing out a bit that lack of velocity, that lack of the fact that dollars are going out there and being spent among multiple people? If I've got $1 and I don't give it to George to pay for something and George doesn't give it to Brenda to pay for something, there's no velocity in that dollar, right? It just sits in somebody's bank or somebody's pocket or whatever, right? And so, you can't be inflationary to the extent that hyperinflationists are thinking, if that's going on, right? But we know for a fact that velocity has been dropped off. So, just some things to think about with all that, guys. Let me see here. Hey, Dex, I appreciate that, man. Thank you. So if we look at the NASDAQ, we're right here. We're kind of at this, let me kind of zoom out here a little bit more. You see where we found support right now? Where we're trying to find support? See this right here? If you lose this area, it's down, right? And I think we're going to lose it. I think we are. I think we're on our way. I think we're 1, 2, 1, 2. Yeah, I think we've got a 1, 2 here. We're on wave 3. Wave circle 3. I've got all these extra things out here. Kind of pull this out of the way. Let me just make sure. Let me double check here. So let's see, right about there. Oh yeah, we changed that a bit. So wave 3, wave circle 3 now has a target of 96.88 basically. That'll be that wave circle 3 target. Minimum expected. And so if we look at that, that's getting you right down around this wave 4 here, right? So just to break down locally here should get us on the way down there, guys. We've had a pretty good drop down here below this wave 1 as well. So again, 1, 2, and then this other 1, 2 here working its way down. But that's the NASDAQ composite there. Hey, Chris, have a great day, bud. Thanks. Have a great weekend. So, again, that's really tech heavy, right? So then we can look over here at the S&P. It's possible, I guess, maybe that that wave 4 could still be in progress here. Or even a leading diagonal for wave 1 of 5, or even ending diagonal, I guess. Gosh, yeah. Wave 5 could actually be done here, like 1, 2. Yeah, so that's 1, 2. That could just be a big, yeah, it could be A, B, C. That could just be a large flat correction for wave 2 here. We're looking for a breakdown below that S1 pivot. That's the EQ here of this blue demand structure where we got that lift off. If we can break down below that, I think it might be a 1, 2 is a flatten down. The other possibility is that this is an ABC. So you get A, you get B, working on C here. So wave 4 is still in progress as a flat correction. That's the other possibility. But again, just looking for a breakdown below the swing low to kind of say, okay, well, yeah, this count's probably correct. We've probably got, wave 3 has this target down here. Minimum expected at... whoops. Oh, that's really kind of going down there. So we got this as a 1-2. Again, 1-2. Same idea with the other one, right? And so we're looking for it to come on down here. Just a quick pull. Probably around that 35.53. Oh, I'm sorry. No, 34.73 area. And that would give us this wave 3 here. Minimum expected target down there. Understand, if this is correct with this 1-2 and this 1-2 here, this 3 on this breakdown is going to be pretty harsh. It should be a strong, big breakdown. Really get people's attention. Let them know that, no, it's not going back up at that point. Remember, each wave has its own personality. Each wave number. What the market's kind of thinking at that point. Hey, RM, what's up, buddy? Better late than never, man. Let me see here. And so real quick, we'll look at the Dow here, which is that much more broad-based index, right? Again, same idea, right? So 1, 2, 1, 2. Break down through here. It's a little bit lower. It really gets us moving down. Right now, we've got a wave circle 3 minimum expected target at 29, 196, and 81. So just that should be in progress because we've got an ABC up here. My only thing is there is this gap up here, and there's this other gap up here, but I think that might be on another move up, maybe fill it in somehow. But it does keep me open. It does keep, the idea is that maybe we might have a little bit more up here before we head back down, still in my thoughts. Because we do have this gap over here from 22nd of April, which should most likely be filled at some point. And, of course, this one right here from the 5th of May. So we'll see if we get the breakdown or if we break on up here. It's always possible here that this could be wave 2 still in progress. So ABC up, ABC down, and then 5 up at the 78.6 retracement around 34.818. That'll fill in both gaps. So, that's what we could be seeing coming in. So if we do get, if it does begin to rally up toward here above that daily pivot, yeah, look for it to probably hit that 78.6 and fill that in to finish wave 2 as a flat correction and then come on back down. Okay? Let me see here. And finally, real quick here, we'll look at oil. And I got to get out of here. I'm running a little late. Oil looks like it still wants to push up a bit higher. I've got a target probably, if we can get a new high here, probably around this 113.5. For this right here, wave 2. And then we'll look for a breakdown below 106.45 to kind of give us that first hint that wave 2 may be done. First real clue on a breakdown below 100 here. And then dropping down below wave B over here at 95.28 is going to add confidence to the count and suggest that we're headed lower. So just kind of looking, do we continue to get these lower highs here and then finally break down below these lows and kind of really just carry it down. Again, the idea, we've got a 1-2, 1-2 in progress potentially to give us that 303, that big move down. So anyway, yeah, there we go, guys. So that's what I'm looking at. As far as Bitcoin goes, again, either 4 is done and we're looking for 5 right around this area, and we're looking for a breakout back above 4, or this is B per the red count, and we've got C up here, maybe around that 15-minute pivot up here at the descending channel support, and that can finish wave 4 as a flat, and then wave 5 again, same kind of area here. Anyway, and then if we get that, then that breakout above wave 4 up here would suggest higher. Would hint that that the bottom may be in for that. So we'll see what happens, guys. Remember, the big thing about trading is what? Risk management, right? First one, most important thing is risk management. Second thing, the second step beyond that is only take higher confidence trades. Don't enter a trade just because. Don't think you have to be in a position all the time. That's going to force you to take bad positions or positions you don't have to take. They just have a chance. If they just have a chance, you might lose a lot of money, right? So don't worry about that. Other than that, as always, remember the only thing you control in the market is how much you lose. So please keep working on that risk management, all right? And yeah, I'll be back on Friday. Oh, no, Tuesday. God, I always do this on Friday, right? I did this last week. Next Tuesday at 11 a.m. Central Standard Time. So hopefully you guys can join in. But hey, we'd love to have you at TexasWestCapital.com or howtotradetowin.com. Just come on in, man. We'd love to have you there. And like I said, once you're in, follow the rules there, and you know with the requirements for the drawings. If you're tier 3, you've got 2 chances every month to win a free month of access. And if you're tier 1 or 2, you've got that 1 chance right now every month. Just all you have to do is just comment, say something in some channel once a week, and then you'll be entered in that every month like that against the other people in your tier. Potentially get you one, okay? All right, guys. Like I said, I hope you guys have a great weekend. Y'all take care and trade safe out there, all right? We'll see y'all on Tuesday. Or if you're in with us, we'll see y'all over in Discord here in a bit. Take care.